Welcome to this week's Metro Detroit Market Update. I'm Ben Lang here with my lender, Eric, and we're giving you the real story behind the numbers. No fluff, no filler, just the trends, shifts, and opportunities that you need to know. Whether you're buying or selling, you need to know how to buy smart, sell strong, and stay ahead of the curve. So let's dive in. Eric, last 7 days, what has been happening with the mortgage rates?
Rates have been rising, primarily due to what's kind of going on in the macroeconomic conditions right now. It's tariffs. We don't know exactly how that's going to play out. There's a debt ceiling coming up for being raised in August. The bond market is still looking at that. And that is really making mortgage rates act just kind of weird over the last week and a half and staying up when the data is really pointing to where they should be coming down.
Now, you told me something the other day that I thought was quite interesting. You said you were on a webinar with one of the smartest guys in the mortgage business, and he was telling you that, for years, he's been able to kind of forecast what rates will do. But for the first time ever, in his career, he said, I can't forecast anything. It's just so up and down all over the place. Can you expand on that a little bit
Yeah,
more?
no, 100%. It's a little bit to what I just was going over. The bond market, which is what determines mortgage rates, the bond market is reacting really to headlines at this point. It just depends on what's on CNBC, MSNBC, Fox News, all these different channels. People are reacting, and the bond market is essentially rates are reacting to headlines right now as opposed to underlying data. There's so much unknown as to what's going to happen with the tariff issue and with how bad a recession are we heading into that everyone is kind of waiting on bated breath as to what is going to come out next, which is different than the bond market that we normally have historically, which reacts to data. It's what is the unemployment rate at? It's what does inflation look like? What are all those different drivers, which are all heading right now in the direction of lowering interest rates? However, there's so much unknown right now in the market with what's going to happen with these tariffs, with what's going to happen with the debt ceiling. These things are really driving what is going on with interest rates, not just mortgage rates, but interest rates in general right now.
Yeah. Yeah. And I'll tell you something else that's affecting the market too is I've seen in the last 20 days now. I sold about 20 houses this year to date. And, every house that I listed January, February, March, and April, it was multiple offers. It was way above the list price. It was, just a huge success. Right. And then I put out 3 listings, maybe four listings since May 1st. And I'll tell you what, Eric, it's been a totally different story. We're getting less showings, and even the people that are saying they're interested in the property, they're being gun shy, meaning that realtors are telling me, hey, they really like the property, but they want to see more. Or, hey, they really like the property, but they're just not ready quite yet. So they're being gun shy right now, and it seemed to really turn at that May 1. I think there's a couple indicators why. Metro Detroit inventory jumped 19% from April to May. 19% from April to May. Huge spike in inventory. Huge spike in inventory. We've also been seeing, in the last 7 days, there's been nearly 2,000 price reductions in the Metro Detroit market, which we haven't seen that for a long time either. Between inventory going up dramatically for that matter and rates going up, which are mortgage applications down?
100%. So if you look at what's happening in May, April was actually a really strong month. We had mortgage applications were up. If you look at what's happened since May 1st, right? We had the tariffs unknowns was already happening in April, but since May 1st, the 10-year yield, which is what drives mortgage rates, is up about 0.5%. So if you look at that, mortgage rates are roughly up 0.5%. Now, it's not always what's published online, because what's published online reports buying the rate down. It reports different marketing programs that lenders are doing. But overall, in the last 20 days, rates have risen 0.5%. And I'm seeing the exact same thing on my side is buyers are wanting to take a pause, see how this all shakes out. They have a little more inventory on the market. They have additional houses as opposed to having to jump at the very first one. There's multiple houses they want to see, and everything just seems to have slowed down a little bit for May. Now, historically, you know as well as I do, historically, it is still a seller's market. We're at 4 months inventory or 4 months supply, which historically a balanced market would be 6 months supply out there. So it is slowing. It is giving buyers maybe a little opportunity to go in and get something right now. But yeah, no, 100%. I'm seeing the exact same thing with the people I have out shopping. I think it's again, it's just so much unknown in the marketplace. The fear right now is making a mistake. I don't want to make a mistake by buying the wrong house. And really, we need to see people changing that paradigm into making a mistake. Maybe is just not making a decision, is getting gun shy, is being a deer in the headlights, because the only thing that's going up and not slowing down this spring in our economy is housing prices. They're still rising, right? They're going to continue to rise. You and I both know that there is every economic trend says that housing prices are going to continue to rise. Doesn't mean they're going to go in a straight line. No, they're going to go up and down a little bit month to month. They're going to go up consistently for the next 10 years. And the one thing that is still driving inflation up, if you look, is rent. Rent is the single part of the consumer price index that is still showing significant inflation year over year. Rent. Everything else is flattened out from an inflation standpoint, except for rent. So people just got to kind of start to change their paradigm around the way that they're looking at this when it comes to buying a house. It still makes sense, but again, so much unknown with the economy right now that I think people are just deer in the headlights trying to consume it all.
Yeah, I mean, the media pushes fear and uncertainty, and that paralyzes people. Absolutely. I do want to reiterate, a balanced market is considered 5 to 6 months supply of inventory, month supply of inventory, and we're sitting in Metro Detroit. We're sitting at 2.1 months, so we're very much still in a seller's market. However, I know that sellers are still in the 2021 mindset of pricing aspirationally. And that's why we're seeing 1,850 price reductions in the last week alone. So it's a perception. We're not in the 2021 market anymore. We're in the 2025 market. Every quarter point bump, which we've seen a quarter point bump in the month of May alone in the interest rate, it just dumps cold water on buyer urgency, right? So
Yeah.
every single time we bump up another quarter point, more buyers pull out of the market. Then you couple that with, a 20% increase, a month over month, 20% increase in inventory. And, it's balancing the market even further. So I'd say we're in a very balanced market right now today. I think it was really over towards the seller side, January, February, March, and April. I feel like it's a little bit more balanced this month. So I think, if you're in the market to buy, it's probably a great month. So you can swing some deals. You're not dealing with multiple offers as much. You just have to make offers on even if the house is overpriced, have your agent write an offer that you think is fair for the house. It drives me nuts as a listing agent. I get feedback from buyers agents saying, "Oh, the buyers love the house, but it's overpriced." Okay, well, make an offer. Make an offer that you think is fair on the house, right? Sellers are probably willing to look at the offer, consider the offer. So don't be afraid to submit an offer that you think is fair.
100%.
Any before we wrap this up, any last thoughts here?
So my thought on just what you're saying exactly. So right now, buyers have a little bit of pricing power. And what they should be doing is reaching out to their local lender and coupling that into things like sellers paid subsidies, buy downs, getting temporary relief. This is your opportunity to get in at 5.5% or at 5% for the next couple years and have the seller pay for it. It doesn't cost the seller a ton of money. It makes a huge difference in your payment on a $500,000 house, which, yeah, it's an expensive house, but not that expensive these days, right? A $500,000, if you can get yourself a seller paid subsidy, a 2-1 buy down, it's going to reduce your payment by $700 to $800 a month. I mean, that's a huge difference. And then it gets you through this first 2-day period. I mean, we are sitting from a affordability standpoint. We have a 2-year problem. We don't have a 30-year mortgage problem. We have a 2-year problem. We have to get by for the next 2 years until rates come down. And to do that right now, there's an opportunity to do it.
Yeah, couldn't agree more. Whether you're buying or you're selling, it's a good time to move right now. There's definitely an argument to be made for each side, but if you are selling, you got to know that the buyer urgency has cooled off. Buyer urgency has cooled off. Again, we're at a 2.1 month supply of inventory, which still makes this very much a seller's market, but we're just not in the 2021 market anymore. And I think that's what really people need to realize.
What was it in 2020 when it was like 2 weeks? It was like 2 weeks supply. 2 months.
Yeah, well, it seriously was. It was less than 1 month supply of
I
inventory.
know it was crazy in 21.
So we're just not there anymore, but we are still in a seller's market, but we just need to be more realistic, and realize that overpriced listings equals stale listings. And I'll just end it with that. Thanks so much, Eric. I will see you again next Friday.
Sounds good.